What is up, everybody? We're going to look at all of my trades from FOMC. It is currently March 20th, 2024, and you're going to see some big trades. You're going to see $7,330.96 be made in these 11 trades. Now, if you would like, you can watch the full narration of this episode on my Ko-fi under the membership section. Become a Ko-fi subscriber. It is a full narration episode. However, in this YouTube episode, I'm going to talk over it, so you're not going to hear what it is I'm saying in that specific episode. You're not going to hear me talking on the hard right edge, because in this episode, I want to talk about FOMC and price action in general. So if you're interested in that, that is there. This is a part 2 episode, so there is a part 1 where I take 5 trades and I only grind out like a little over $300, and then I'm like, you know what, I'm gonna sit down and I'm gonna wait for FOMC to kick in. So we're just gonna go ahead and play it again. I'm not gonna really talk too particularly about the specific trades. I'm just gonna let it run in the background. These are 3-second charts, by the way, which is very important. So one thing I want to talk about FOMC, and this is going to be an FOMC video. Obviously, more volatility comes in, a substantial amount of volatility, which we can clearly see on these 3-second charts. This is a tremendous amount of volatility. It can also be seen on higher time frame charts. Now, what you guys have to understand about FOMC is just because there's more volatility doesn't mean that these big holds you might be looking for are going to happen or work out. So there is a misconception that traders think that volatility can create these opportunities where you can actually hold trades. And I would say that is true to a degree, and that is assuming the volume flow is pretty good. We're getting a lot of volume flow where ES, and this is going to be a more complex video, so if you're newer, this might be going over your head. We get this order flow where ES simply is not moving under its order flow. It moves because NASDAQ moves a lot. Now, does it always move with it? No. There'll be points where NASDAQ will blow out, and then you'll start to see somebody iceberging and reloading on NASDAQ. So a lot of times these markets are not, and there's the first short for you guys, by the way. So a lot of the times these markets, and I think it's a small loss, a lot of the times these markets are, especially recently, ES is just simply not moving under its own power. It's giving this illusion that it's moving under its own order flow, but what's happening is there are these limit orders all stacked up, and if the NASDAQ gets stuck in like a 4-tick range, there'll be absolutely no order flow hitting ES whatsoever, not even a 1 lot. If NASDAQ kind of cycles in an 8-tick range, you'll start to see a little bit of order flow come into ES, but it's going to stay on exactly the spread usually. It might bump up or down, but all the order flow is going to come on at a specific price, say 55 even, and 55.25 may have a couple of contracts, and then 49.75 may have a few contracts. That's one-way order flow. So the markets, these big holds and stuff, in my opinion, as I gain more experience, it's not this environment. We're still in a low VIX environment. So I had to pause this because I wanted to check what VIX was. VIX was in the 13s all day, even with this volatility. Like overall, it's in a 13. So the volume, so what's happening in FOMC is it's giving an illusion that there's volatility. Yes, it is volatility. I understand it is volatility. I understand it is moving. There's another short right there. I get that, but what you have to understand is the way the market moves in low volatility is exactly what how it's moving in higher volatility. So before FOMC, I took a few trades, and there were opportunities there. Obviously, you know, we took 5 trades. It was like 700 and something bucks, but commissions is pretty high, so it ended up being like 300, a little over 300. Those low volatility, this is a good little short right here. Look at this. We're gonna probably get it out right in that section. That was a nice one right there. So volatility, if the market is moving, if I'm getting into a trade, a scalp, and it's only giving me like 2 ticks to 4 ticks at best, the volatility is obviously very bad. Now, what you have to understand is that 2 to 4 tick profit that the market is giving you in that, when it goes into like an FOMC environment, when it turns into a higher volatility environment like this, that 2 to 4 tick rotation is now what we're seeing is going to be like 10 ticks, 12 ticks on average, 10, 12, 13 ticks on average. So what you saw there was a really good little scalp on that last trade. What you, and here's a long right here. Let's take a look at this one. And this is already moving 6 ticks in my favor. We're holding it. This may or may not turn into a break even. I think I try to squeeze this a little too hard, but you notice it's maybe 2 points, right? In a lower volatility environment, this would be like 2, 4 ticks, if that. So because the volatility is higher, I think we're going for a break even right there. Yeah. So that harder move, it's the same fucking shit. What's happening is when you have this FOMC volatility, it's taking what the market is already doing and it's just stretching it. It's the same type of price action. It's the same chop. The abusive chop you guys are experiencing in that low volatility environment, that really abusive choppy bullshit, don't think FOMC is going to be some savior to your trading, because you're going to have just as many problems if you don't understand how to navigate that lower volatility environment. Here's another long right here. Let's see how this one goes. So you can see it's working about a tick. But what's good is this is actually instantly working a tick, 3 ticks in my favor. And in a low volatility environment, it wouldn't do that. See right there? And we're trying to get out right here. What are you looking at? 1, 2, 3, 4, 5, 6. We get about 6 ticks or some shit on that. But it went about, you know, 10-ish in my favor, a little more. That 10 tick move, again, is the same thing as a 2, 4 tick move in low volatility. It's just the price action is being stretched out. So there's this illusion you're going to make more money. Now, yes, clearly we did incredibly well today, and we did make more money than we would in these other environments. Yes, it's not exactly an illusion. You will, if you know what you're doing, make more money in this environment. However, what I'm trying to say is this environment is the exact same shit, just stretched the fuck out. I'm going to be repeating myself a lot here. It's the same thing, but it's stretched out. So the importance of that is like all the trapping and all the tricks that are kind of being played in a low volatility environment, because this is pretty fucking choppy. I mean, look at your 3-second charts here. This is very choppy environment. A lot of these trades I get into that work as scalps come back. They come back. I think we're trying to get short in this region. We may or may not cancel that order right there. Yeah, we canceled. We attacked in there and we just weren't getting filled. We did miss quite a few trades where we couldn't get in. Kept cool here. But the thing is, a lot of these really nice scalps that are yielding, you know, 2 points or more, the trades are imploding. So I take them off just as quickly as I would in a lower volatility environment. What I'm doing is I'm mentally calculating that stretch on the price action. Same chopping, same types of rotation, reclaim, slips still work. Here's a long right here. Let's see how that one works out. Well, what's nice is that's instantly working 2, 3 ticks in my favor. Whereas in a very low volatility, and see right there, again, right there, that could be the equivalent of a 4-tick, 2-tick range in a low volatility environment. And that yields really good because, again, it's stretched. So yes, you're going to make more money in volatility, but it's just an illusion. It's the same shit as low volatility. So if you can't navigate low volatility, maybe you can navigate this. Maybe you can navigate these higher volatility environments like FOMC. However, when it's low volatility, are you making those adjustments? Are you making those adjustments knowing the trade is just not going to go as far? And if you're having a hard time in low volatility, but you can do this, well, the point of this video is to tell you, hey, it's the same fucking shit. You're just not gonna get as much for the trade as you would here. And what you got to watch out for this specific environment, what you need to watch out for is it's giving you the illusion volatilities here. So therefore, when it's moving, and it's moving more than we've seen because it's FOMC, this is a lot of volatility. I mean, you know, Ukraine invasion and all that, it moved like this a lot around that time because, you know, it's a war. There's all this uncertainty and shit. But look at these 3-second charts. Look how brutally choppy it is. It's the same thing stretched out. Now, what I'm saying here is with this shit, and there's your 30 seconds. You can see where the FOMC rip came in on that. So with this shit, so you're going from a low volatility to a high volatility environment. It's still VIX 13. So the volume flow is, here's a short right here. The volume flow is just not even giving me a fucking tick up in this region. Let's see how this one pans out. I don't remember what trade this is. And I know I keep sidestepping. It's just a different type of video. But I do want to look at these with you guys. So we're going out for a 3-tick loss because that went a tick in my favor and that's it. And for this type of volatility, that's really bad. That's the equivalent of getting in a low volatility trade and it doesn't even go in my favor. And then it blows me out on the back end. Same thing. But this one, what's nice about this high volatility is it has more slop. And low volatility, they will hold specific prices to a tick. In this environment, it's not quite happening at that. So you're getting a little more slop. You're getting a little more bleed over where we're on the smallest time frame. They're not holding certain prices exactly to a tick. So it's easier to get break evens or pick up little 1-2 tick wins in this environment. Same game. But what I want to, I keep trying to spit it out and it's not happening because we keep putting on trades here. So when it goes high volatility like this, and I'm getting short here, fuck, I'll never spit it out. Take a healthy loss on that one. I think that was my biggest loss. I think we do take an $800 hit at some point. But the very last trade you guys are gonna see, it's gonna be like a $4,000 run. So it's gonna totally erase that. And just trading size paper cuts are pretty big. Hopefully I wait. So anyways, with this higher volatility and another short. Fuck me, guys. Let's watch it, how this pans out. 4 ticks in my favor. So on these coffee narrations, I try to edit the charts so you guys can get a better view because I look at so much, but I try to edit on the fly. That's a nice little trade right there. A little 6-ticker, 7, 8, 12 maybe. Going for it right here. Maybe? Or do I push it? I might push this. Am I pushing it? How far? That's a good little trade. Trying to get out 48s, it seems to me. So nice little trade right there. Good little trade right there. Anyways, so the thing is with this volatility, as it increases, it's going to give you guys the illusion that these bigger holds are going to happen, and that's not the case. It's not. It's not. You're not going to hit these big rippers you think you would hit in higher volatility. It's like I made a video on why you should scalp in 2024, and this is the same shit. It's just I can get bigger scalps because there's more volatility, but a lot of these trade, like I got short, right? It's already come back. If I didn't pull that, the trade's already come back. Look how, look on your 30-second chart here. Look how brutally choppy it is. The trades are coming back. The trades are coming back. So, like, if I'm not pulling these fucking things, they're coming back. And that is the fucking difference. So, with this low volatility environment, those of you who complain that you get into these holds and they constantly come back, and I've heard that from multiples of you, it's happened to me too a lot, that the remedy is the scalp. Well, you see volatility and you think, oh, fuck, I can push it. No, you can't. The same exact shit is happening. Again, it's the same shit stretched. So they're going to come back. So you get a nice 15-tick run, it's going to come back. Most likely. Now, there are times and places where these trades go and they run and they don't come back. However, I find that to be a lot more rare. In my honest opinion, the way the markets are now, the way the ES is, I think this is a product for scalping. And I think when you try to push beyond that, it's not going to work out for you. So there's two traders I want to talk about because I talked about FOMC before FOMC kicked off. One trader was telling me that he's going to short based off of a specific type of news. And I said, that's very dangerous. You need to be careful because, and this isn't to throw him under the bus, probably watching this, what have you, but you need to be very careful. Is what I'm saying is the motherfucker is going, like, I think trying to make a decision based off of news is so stupid, to be honest with you, because it doesn't fucking work like that. It's you don't just fucking sell because the rate hikes are going up. That's bullshit. Here's a short here. Let's see. And I see it, just this instantaneous momentum where I'm not going to get that. So we take it off for a point. It definitely goes more than a point in my favor. Was being very aggressive on it because of the, well, if you want to know, you can watch it on the coffee. I explain exactly what I'm doing and why during these trades. But it's just all reclaim shit. There's a video on that. You guys can go check out that video. It's this one right here. I'm gonna go back to the footage, but yeah, so I think selling rate hikes or buying where they cut rates is just stupid. It's absolutely, because you can't fucking accurately time this shit. It's like you're not gonna be able to time the motherfucker, because the swings are so wide. It's going to swing in a very violent way that you're not going to get into it precisely. And if you're going to do that, your stop's got to be huge. So I asked him, where's your stop? And he said 75's on the fucking thing. He said he's going to put on a stop at 75. Well, guess what? This pink line right here, that is 75. This was, FOMC opened up right here, right? You're going to run a stop that wide? Dude, that's a 153 fucking ticks. I mean, assuming you get in there, you could have got in a bit higher, but look, it fucking hit the 75. It never blew out the low end. Even though rates stayed the same, dude still went for the same trade. And the motherfucker went like an additional fucking, it's gone 268 fucking ticks. That way. You shouldn't be doing that shit. You know, buying news, selling news as a day trader on this product, on these future index products is stupid. It's suicidal. And he got hit. He got hit. And this isn't me saying, you know, you guys got to learn. You guys got to get fucked up. I warned him. Listen, I'll warn you guys. I will warn, and I'm not saying just listen to me and everything's going to be okay. No, that's not how it works. You need to cultivate your own skill set to be able to fucking do this shit, okay? It's a skill-based job, and listening to me isn't going to make you guys good. Watching me do well doesn't mean you're going to do well, because you have to cultivate the skill. It's a skill. My results aren't yours, and it doesn't really fucking matter. However, when I get these results and you see this good trading, wait till you see this last one here. When you see this good trading, it's like I have clarity and understanding of the price action to know why it behaves the way it does. I know why this behaves the way it does. So when I say these things, it's just like time and time again, you got to really understand how this market moves and ebbs and flows. And I swear to fuck, most traders don't really understand this, right? When I talked about Russell being a correlation in this video right here, you know, people were shocked. When I went on the Corb's podcast and talked about it, he was like, why that? And time again, I've shown why. There is something going on in the marketplace that traders just don't understand what this is, how it really operates, how important reclaim slips are, how important it is to lean into like micro ranges, how often holds are going to get blown out. You know, I see future traders on Twitter quitting futures to go into equities because they just can't fucking deal with it. And it's because, in my opinion, they don't understand this thing. I think this is a product for scalping, at least in 2024. Even when the volatility kicks in like this, it's the same exact choppy mess. It's just stretched out. And once you really understand how it ebbs and flows, because it moves and it flows in such an elusive way that normal trading brains, your normal retail brain with all the shit you've consumed, technical indicators, all these price patterns, that has an effect on your subconscious mind. So you guys try to apply it to this market, and it just seems to always come for you, stop you out, top tick you, shake you out. And it almost seems like the fucking thing is so predatory that it knows when you're trading. Hell, you could be on sim and it still knows where the fuck your shit is, right? Somehow, even though it's not even in the market, and those of you that, and it still seems, because it's the way it dances and it ebbs and flows, and you have to completely recalibrate your ability to see it for what it really is. And once you understand what it is, you'll understand that it isn't as predatory as you think. Does it do predatory things? Abso-fucking-lutely. But it dances and moves and bobs in ways that traders don't fully comprehend. If you're not looking at it on this small of a time frame, then, and if you don't understand it at the most macro level, then you're never going to really fully grasp it on a higher time frame, and you're going to have a lot of problems with trades, either imploding, not running the target, coming back. Again, it's a low VIX environment. Trades don't run. And in this FOMC, trades don't run. Now, they run a lot better when the volatility is low, but it's still to be treated. It's just, it's still to be treated like a low volatility environment. So this trader gets blown out. And it's like, I told him, what you got to understand about FOMC is it will Sometimes it doesn't move. We've had a few FOMCs where it don't do shit. And it's weird. And then there's like FOMCs where it don't do shit for a hot minute or 2 or 3 or 10, and then it blows out. Then there's FOMCs like this one where it will just absolutely rip. And it will rip and rip. And the limit orders are pulling. First and foremost, there's a shitload more volume coming in. There's more volumes coming into underlying assets. All the shit in the S&P 500. I think this is going to be the big trade coming up here. I do want to, this is might be the $4,000 trade we're about to hunt. I do want to just talk about it, and then we're not going to look at this footage after the fact. This is going to be the last trade of the session anyways, because I got so fucking stoked. I'm like, whoa, I'm too excited. I need to leave. You can't get too excited in your trading either. That's not a good thing, but psychologically speaking, it should be, it'll be setting up here in a minute, but I'll continue to talk about this trader. Trader is like, what I'm telling him is like the FOMC is going to just fucking rip. And it's going to rip and blow out a specific area, and it's going to create a giant reclaim, and they're going to take the fucking reclaim back. When I talk about these slips and reclaims, it's like nobody takes that shit seriously. Nobody seems to really understand what the fuck that is. And it's just like nobody really understands like how these things operate. Like it's every day. It's every day there's a slip and a reclaim. It happens all day, every day, in every fucking product, by the way, for the most part. It happens in Amazon, Tesla. So excuse me, I'm choking on my own spit. So it happens. Look at that huge dump. Just a fucking 3-4 pointer layup. That's how dangerous this can be. It's just as fucked up as low volatility. You just can lose more money quicker. Sure, you can make more quicker, but you can lose, excuse me, more quicker too. Fucker rotates over my entry by a tick. Get into it. A little late on it. But I'm like, it's going to go 51s. It's going to probably go 51s right here. I'm calling out 51s. Watch this shit. Watch this shit. It's a reclaim, by the way. There's a reclaim here. I'm laying it up into a... There's more going on contextually. Again, you can watch the coffee episode to hear it. I'm talking about 51s here. Just a tremendous amount of... like, boom. And then we're out of it. $4,000 right there. Over $4,000 right there, man. So... but you see how it's dancing on me, yet I have the confidence to hold that specific move. It's just like, because I understand it at the smallest level, and if you can understand it there, then it's going to affect your higher time frame trades, plain and fucking simple. If you don't understand it on that level, then you're not going to understand why your higher time frame shit just doesn't work like it used to. So, you know, then back to the story of this trader, you know, who's selling the fucking thing off news. And again, he's willing to run a large stop on some micros. So be it. But still, you don't want to do that, because if you're just trading micros and that's it, that's a huge hole to dig out of. 100 and something ticks on a micro is a huge hole to get out of. You're either going to have to fix that with size, which we know that can turn into a big problem, or it's going to take a long time to dig out of that with a micro to yeet some fucking lottery layup like that. News is not a good enough reason. And I was telling him, you know, that fucker, I've seen it blow out, and it creates this sense that it's going to run this way, but then they just take that fucking reclaim back and rotate it back in. This one, this specific FOMC did dump back in, but it didn't dump back to where FOMC opened. It did dump back quite a bit, but not quite to where FOMC kicked off right before the rip. And then it went up and kept going up. And it was 268 ticks higher. Fuck. I mean, I'm just saying. And then I had another trader, I think it was short 65s or some shit. I don't know what happened with him, but I was hoping he would get the fuck out of that. I don't know what he was holding it for, what he was looking for. I hope he got out of it. But the motherfucker came back. Got in. 65's right here. Somehow he nailed that top. But look, came back. Fucking came back. And not only that, but you don't sit around and find out, because it blew out that back end so bad. You're sitting short here. You're feeling high and mighty when this thing is dumping. Hell, it almost comes back here. You're feeling high and mighty. This would make my asshole pucker. And this is dangerous, man. You're going to leave a fuckload of ticks on the table like that? You know what I mean? Fucker come right back. Not only does it come back and test, but it don't go nowhere near as far in your favor on this bar. And then it blows you out on the back end. This market stop runs both sides, plain and fucking simple. And trying to nail a good clean entry and not get blown out on the back end is so... It's rare. That type of opportunity doesn't really exist. That this market, what's happening is it's throwing out these reclaims, and those reclaims are going to get taken back. It kind of walks its way down right here, which is great. And there's a bigger reclaim here. And it's walking down, so there's a good chance it won't blow back out. But they decide to walk it back up, rotate it, blow out here, reclaim here. Then they dump it. And this massive reclaim, this is why I actually got long on that big trade, that $4,000 trade we just saw. Very interesting trade. Explain it in the coffee. But like this trade right here, I get in it because of the reclaim. And they put in this massive dump. Listen, and that's the thing. When ES gives you a good hard momentum run, they're going to take it back. That's not a good thing. If you're trying to get into a hold, you want the market to chop and walk its way in your favor. Now, they could blow it out, but there's lesser of a chance they will do that. But if the market instantly rips in your favor and you got in clean, it's coming back. It's probably going to come back. So that's what happens, is it just dumps suddenly here, right? It dumps suddenly, and they take it right the fuck back. And then they jam it up again into the 65s, and then they take that jam back, and then they re-jam it. Now, they didn't take this section back because there are times where it won't take a reclaim or a slip back. Again, you want to see that shit, go watch this video. I recommend it. Sometimes they don't take them back. They didn't take this one fully back. So there are nuances with these fucking things. And if you really like what I do, you want to learn more about what I do, the coffee is a great place. You can also go watch this playlist. This is my free course. The coffee is just a shitload of case studies. It's the best bang for the buck. And I just constantly showing how this shit works over and over and over again. And that doesn't, and again, you're not going to get these types of results because it's a skill. It's a skill. It's going to take you, even if you watch what I do very carefully, it's going to take you an extremely long time to build out the skill set and know how to do this shit. The point of it is to understand this price action. Why it does what it does. How to navigate that, and how to attempt to find opportunities. And even when you find the opportunities, those quickly can evaporate. Just like poker, you get two aces, but when the flop, turn, and river come, those aces may not be good cards anymore, depending on what your opponents have, and you may need to fold them. This is a poker game. All that classic bullshit of getting in and holding all that crap and just leaving your targets on, that don't work. And we also see if you have a massively wide stop all the way to 75s, you're still not fucking safe. Because that stop was 100 and something ticks away, and it came for it. And not only did it hit 75s, but it blew it out. It blew it out even further by like an additional 100 ticks or some shit. So even you trying to go for a hold and run a very large stop, you're still not safe. So in my opinion, this is a product for scalping because it can switch and turn so violently that any setup, any high probability setup where you have a good read on it can instantly turn into shit. Because that price action, if you can read it on this level, will tell you, it will tell you that your trade's going to fail. The gentleman that got short 65s, when it rips like this, and I'm getting long down here, this rip is telling you it's coming back. So you may want to get out. You may have a target down further down, but because of that reclaim, you better get the fuck out. This market will tell you when your setup is probably going to fail. And most of the time you try to call its bluff. Most of the time you're wrong. Most of the time I try to push something to that target, that bigger target. Most of the time it don't work. Especially now. That's the reality of the markets today, March 20th, 2024. That is the markets. We are in a different regime, folks. We've been in a different regime. All that old school classic shit you've learned don't work here. It might work in equities. It may work in stocks in play. But when I go look at a goddamn equities chart, it is just as fucked up and choppy. And the same shit, the reclaims, slips that's happening here are happening over there. And why is Apteros and SMB rolling out scalping courses? Why are they rolling out scalping courses this year? Or I don't know if Apteros has rolled it out, but they've been talking about doing it about a year ago. Why have they been talking about that? Why has SMB rolled out a scalping course? Why do you think that is? Because that's what works in this fucking environment. The days of the year 20 and 21 where you could hit these huge home runs, those days are over. The days of buy the pullback type shits and just let it rip, those days are over. This is what we live in. And this is how I make it work, okay? And I'm still having, it's not easy. Let's not mistake that. It's still difficult. Like I was on the seat of my chair during FOMC, like to where my ass cheeks are just gripping the chair so hard that it bunched the material of the chair up in the middle. And I'm like, dude, I'm too much on edge. I need to step out after that trade. I'm starting to get a little too skittish. I'm a little too on edge because I'm not used to this type of volatility. Like my brain, I traded it very fucking well. I traded it almost pitch perfect, and I'm happy with that. You know, and I could have made a lot less and traded it as long as I'm trading pitch perfect. If I'm sloppy and I do really well, that's not good trading. So that was really solid trade. This entire week has been insane, by the way. Monday, Tuesday, really good. Today, very good. Insane week. So you can see those episodes on the coffee. I know I keep talking about that shit, but that's what funds this. What you're getting for free here. You can always like it as well. And this is content you're not going to find anywhere else. You're not going to find this content anywhere else. Nobody's talking about this shit. And I keep talking about the same things over and over. I mean, the slip reclaim video, this came out like what, October or some shit, and this phenomenon's still happening to this day. It's going to happen tomorrow. It's happened for years. So understand what it is. If you can understand what that is, what's happening, then you have more information. Information is power. You can make better decisions, and you got to understand that you just can't put on stops and targets. It's not how it works. And this type of price action is simply stretched out. That's all it is. It's the same shit. So if I hit a 50 tick, like if there's really high volatility, super like higher than this, you know, we have another war breakout and it gets extremely volatile again, because I did a really good when that Ukraine thing kicked off. It's sad. It's sad that as a day trader, our best opportunities are when other people are suffering or even dying. Okay, so, but that is the best time for us, unfortunately. So I don't want war to happen or financial meltdowns to happen. But I am, you know, I mean, it's gonna happen, and this is my job. So, you know, that's what it is. Kind of gone off a moral thing here. Because I don't want to go, oh, the Ukraine war was so good. No, there is a dark reality to that I definitely sympathize with. So it's not like, oh, the Ukraine war, woo. I mean, let's take a minute and step back and just realize the death in that, you know, is fucking horrific. However, that period of time created volatility, and going into how this game works, it's the same type of chopping then as it is now. It's just really stretched out. So there's this illusion you're hitting these big trades, these 50 tick hit or runs or 100 tick runs. I mean, very common then. It's the same thing that's happening here. It's just stretched out. It's the same price action, the same chop, but it doesn't look like it's chopping because, again, it's stretched out. Now, the VIX is higher than in the 20s, so naturally, you're going to get a lot more volume flow as well. You're getting more volatility, but you're also getting a lot more volume flow overall. You're not getting this one-way bullshit. You have a lot more market participants, so that does clean things up a little bit. You get more bar overlap. Again, where they're not holding it to the tick precisely. Just like FOMC, there are a few areas where they held to the tick precisely, but they didn't do it damn near most of the time the thing was moving. So that's more forgiving. It's easier to break even. It's easier to get out for it's easier to paper cut your way into tradings. You can be a little bit sloppier in these types of environments because of the bar overlap and there's less trapping happening. I know that's kind of going over some of your heads. Just bear with it. Yeah, it's just the same thing. It's the same thing as it's always been. I mean, it's just stretched. So it creates this illusion that you're making more. But it also creates the illusion that, which you are making more, but it also creates the illusion that you can push a trade further than what you normally would, which isn't entirely true because they're going to still fuck check you. It's just the scalps are bigger. And understanding how to navigate low volatility, you'll be able to navigate this. And when the volatility comes in, you have to realize your 2-4 tick runs and low volatility, that's probably as good as it gets. That's a good trade. I mean, it is. Don't go intentionally hunting 2 to 4 tick trades. I think you should be leaning more on higher time frame, multiple factors of support, and really try to swing for the fences. And if the momentum isn't there and it's all it's given you is 4 ticks and 2 ticks, then it's probably best to take it. And I'm speaking on my behalf in my trading. I'm not telling you guys what to do. You guys do whatever the fuck you want. I just know what works for me. So again, in this, those 2 to 4 ticks are now 10, 15 tick runs at this point. So I'm able to make that adjustment. And when I know when it's moving, you know, and it's stalling 8 ticks in my favor, you know, normally that would give like you guys the illusion I can continue to hold and run it, but I know they're going to still fuck check the entry in this environment. So I hope you guys have a deeper understanding. understanding of what this is, what's going on, why things are doing what they're doing, and the illusion of it all. Again, you're not finding this anywhere else on the internet, and I'm showing you guys it work over and over, and the least you can do, you can always donate as little as $3 on the coffee or a super like, or you can give me a thumbs up if you really enjoyed this but you got no fucking money. That is free. Help me out to grow the channel, because again, I give you good fucking shit. All right, I'll see you guys in the next one.